Are you planning to take an education loan but confused about how much money you'll need upfront? Do you know what margin money is and how it can impact your loan, your interest, and even your repayment? Hi everyone, I am Simran, co-founder at EpicRed, and in this video I am going to break down everything you need to know about margin money in education loans. So what exactly is margin money? Suppose your total education cost is 10 lakhs and the margin money is 10%. That means you need to pay 1 lakh by yourself and the bank will lend you the remaining 9 lakhs. It's usually expressed as a percentage of the total loan amount. And the idea here is really simple. If you contribute something upfront, it shows financial responsibility and reduces the lender's risk. So let's understand this by one more example. Let's say your total cost of education is 20 lakhs and the margin percentage is 15%. So the margin money that you will be paying is 3 lakhs and the bank loan will be 17 lakhs. Now you must be thinking, why should you care about margin money? Well, there are a few reasons. First, paying margin money shows the bank that you are serious and committed for your education. Secondly, the more margin you pay, the smaller your loan would be, which means less interest rate over time. Also, sometimes paying a higher margin can even get you better interest rates. So let's talk about how much margin money different banks and lenders usually ask for. First, public sector banks. For SBI, if your loan is up to 4 lakhs, there is no margin money. But above 4 lakhs, you might need to pay 5% for studies in India and 15% for studying abroad. For Union Bank of India, up to 4 lakhs, there is no margin money, but above 4 lakhs, there is 5% for domestic studies and 15% for abroad. And in this case, the NRI students pay 15% margin no matter what the loan amount is. Similarly, for the Punjab National Bank, up to 4 lakhs, there is no margin, and above that, it's 15%. And for the Bank of Baroda, up to 4 lakhs, again no margin, and above that 5%. So as you can see that the public banks expect you to contribute a part upfront, especially for the bigger loans or the overseas studies. So now let's talk about the private banks. Axis Bank. Again, there is no margin for up to 4 lakhs, and above 4 lakhs there is 5% for studies in India and 15% for abroad. Similarly, for ICICI Bank, no margin for premier institutes. For other institutes, it's 15%. For IDFC First Bank, it can offer up to 100% financing, meaning zero margin money. And finally, let's talk about NBFCs. These are very student friendly for full lending. Most NBFCs offer zero margin, so you don't have to pay anything upfront. NBFCs like Avance, Incred, Prodigy Finance, Auxilo, Leap Finance all can give 100% financing, though sometimes interest rates are slightly higher compared to the public banks. So to sum it up, margin money is the portion of your education cost that you pay upfront while the lender covers the rest. It actually affects how much you borrow, your interest, and even your repayment period. If you're feeling unsure about how much margin to pay or which lender gives the best deal, EpicRed can help. We have partnered with multiple banks and NBFCs, and our loan experts can guide you and help with the documentation and make sure that you get the right education loan with minimal stress, and that too everything at free of cost. So if you are planning to take an education loan, click the link in the description and reach out to our expert counselors today or visit epicred.in. Thank you for watching. See you in the next video.